Hello and welcome to NDTV Profit. You're watching Profit Insight, and my guest today is Sundararaman Ramamurthy, who is the MD and CEO of BSE. Mr. Ramamurthy, thank you very much for joining us on NDTV Profit. Your stock has rewarded the shareholders in the last 12 months, going up by more than 300%. We wanted to understand what's the change that's happening in BSE. You've been in charge of that for last 12 months odd, and we have seen that changes coming in some of the segments. So to begin with, sir, when you came in January of 2023, what kind of changes that you brought in?
Thank you, first of all, for having me in the studio. To start with, I'm not responsible for the price rise. Price is a point which demand and supply in the market decides. In terms of me joining in Jan 2023 and the changes post that, a couple of things we can talk about there. One is in terms of reintroduction of products and derivatives, some product specs changes there, and change of logo and brand building efforts, and most importantly, employee building effort. In any organization, the success or not success depends upon the employees, because they are one of the most important stakeholders. Whatever we have done to ensure that the employee morale is very high. They are very energetic, enthusiastic, and they want to willingly contribute for the growth of BSE. The one simple point that we have been driving from the day we joined was to make BSE more vibrant. So if you look at our logo also, the tagline is the power of vibrance. I think all the employees are aligned to it, and they are putting in best of their efforts, because of which we are seeing whatever we can call as success in the performance of BSE till now.
You've also brought in new talent also to the exchange, right? Because the old talent may have retired or there was voluntary attrition. So the new talent is also working in favor of the change, that vibrancy which has been brought in.
That's absolutely right. Post Jan 2023, the average age of BSE employees is very high. Because of which we had a lot of retirements, particularly at the top when I joined. A few resignations were also there, and therefore we had to bring in on an urgent basis talent from outside to take care of the vacant slots that have been created. So that also has helped, because the new talent that has come in has come with new energy to perform. And you're right, therefore, that has helped. And also, there was a recruitment embargo, sort of, in respect of BSE at a lower levels earlier. We have opened it up, and we are today bringing in employees wherever there is a vacant slot, which was unfulfilled for a long time. And once you fill up the employees' vacant post, that also gives a lot of indication to the employees that we are here for building the business. That in itself improves the morale and therefore the contribution to the business.
If you look at the structure of BSE, you said that there has been a change in the way people are now looking at it internally, BSE. But externally as well, people have adopted that change, saying that there is change for good, and that's why the shareholders have rewarded, or the markets have rewarded the shareholders. How do you look at the BSE positioning as a whole within the Indian capital markets? Because we earlier had NSE, which was almost the only stock exchange, to put it that way. But now, in the last 1 year, we've seen more market share gain by BSE, not only in the cash market, but also in the futures and options market.
See, as you know, cash market has been there for a long period. And there, at some point of time, BSE had a significant market share. Somewhere around Jan 2023, when we joined, we found that the market share has deteriorated a lot and come to a single digit. It was hovering between 5 to 6% at that point of time. And in respect of derivatives, which is a 2 decades plus market in India, BSE had never had a steady volume or steady growth in the derivatives.
It was primarily led by LES, right? Liquidity enhancement schemes.
Correct. So it was only a liquidity enhancement scheme which was sustaining it to some levels, and once it was very clear if the LES is withdrawn, the structure may not stand the test of time. So that was the situation in respect of these two. In respect of currency, the futures were doing well and the options were not. Mutual funds, we were doing good. So this is what we inherited in Jan 2023. If you look at it, we try to make some product changes in the cash market. There you cannot create any unique position for yourself, which we can talk about later if you want. The most important area where we felt that we can position ourselves and we can make a change, we thought was derivatives, equity derivatives. So in equity derivatives, based on market feedback, we introduced, or rather reintroduced, 2 contracts with slightly modified product specification, and that looks to be working well. That is one reason why the market has shown greater interest into BSE, and it's working. The most important point there is the way we are positioning ourselves is we are a complementary exchange and we are not competing with anybody. How do we say that, and why do we say that? If you look at the beginning of the week and end of the week, the 2 indices introduced by us start on the beginning of the week, that is BankX, and the end of the week is Sensex. All the prominently traded indices are in between these 2 days. And the correlation coefficient between these indices with the already prominent indices is very high. If you take BankX correlation with Sensex and Nifty is around 94%. BankX correlation with Bank Nifty is around 99.9%. BankX correlation with Fin Nifty is around 97%. So why am I telling you all these numbers? The reason is, therefore, BankX can work in conjunction with any of the products that is already prominent in the market. Thus, it actually serves the purpose of a complementary product and not a competing product.
It also allows movement of liquidity pool from one product to another
smoothly, and also joint strategies. People always have, when there are highly correlated products, people are able to do joint trading strategies. They call it as pair trading, lead and lag, whatever the name could be, because we are not experts in strategies, but certainly we are experts in understanding what product has what type of a correlation.
True.
So the complementary role is the positioning in respect of BSE, in respect of itself in the market. That has helped, that has grown in the F&O segment. And in cash equities, the issue is you cannot make too much of a product differentiation.
True. Because, yes, except for transaction cost.
Correct. So that it has been very clearly observed from the past, from various experiences for BSE. The market liquidity is not elastic to the transaction costs. Liquidity is a function of stickiness that is brought in because of various other reasons, not just by transaction costs.
Otherwise, you will only get the block deals at your window, right?
Absolutely. So what we did was, initially we made some product differentiation in respect of all stocks up to rupees 100 in value. There are around 650 such stocks. What we did was, we reduced the tick size from 5 paisa to 1 paisa in respect of these stocks.
Okay.
That helped in improving liquidity. The market share in respect of these stocks at BSE increased from 9% to 12%. But beyond a limit, you cannot be going on changing the tick size. For 1,000 rupees
this is
stock,
100 rupee stock.
Correct. For 1,000 rupee stock, if you put 1 paisa as the tick size, it will not work. So this is not a scalable model. The scalable model could be only by when people participate more. One important observation that we had was, there was no ecosystem for people to participate in cash equities. What do we mean by that? Institutional players, HFTs, retailers and prop trading desks are the 4 pillars of any trading system. None of them were interested in BSE because there is no product other than the cash equity. Cash equity is in any case available in another market. What is the unique selling proposition of BSE for these people to put in their energy, effort, infrastructure in respect of BSE platform? So when we introduced these equity derivatives, which are unique, similar but different, therefore complementary, then people started looking at it. And once they found it has some meaningful role to play jointly with the existing products, they started putting their infrastructure. So clearly, the infrastructure building has started happening. To just tell you how bad the situation was, most of the retail brokers either did not provide BSE on their mobile platform, and if they provided, it was in such a corner it is very difficult to trace the BSE prices. And even if it was traced and placed order, the interoperability which is provided for by the regulators was not permitted by the broker to his clients. What does that mean? They find the price good in one exchange compared to the other. Wherever it is good for them, let's say they buy there and they sell in the other exchange. Intraday, while the clearing corporation was affording the margin benefit, the broker was not affording the margin benefit to the client, because his front end was not built for providing intraday interoperability.
We're just going into a short break, but when we come back, we look at how BSE is looking at some other products and platforms, including the BSE Star MF platform, and how it's working for BSE. Globally, we have seen that exchanges are becoming tech platforms for various kind of asset classes. You have a classic BSE Star MF which is there. How do you see the growth of that? Because SEBI is also looking at bringing in other platforms for similar to Star MF, where aggregators can come and offer that kind of platform. And you've been doing that for a couple of years. So what is the experience there, and how easy is it to scale it up for you?
No, it's a very valid question that you're asking. Star MF is a great platform. It helps to showcase all the mutual funds in a single place for an investor who comes through a distributor. We are doing extremely well there. We process around 4 crore plus transactions in a month now. We have a good amount of market share compared to the similar platforms in India. And we also are responsible for bringing in a significant percentage of SIPs. Significant percentage of SIPs happen through the Star MF platform. The ease with which they can be brought down to start with may not be very difficult. You can bring a platform. But what happens is when regulatory changes happen, to keep updating those platforms becomes sometimes a challenge. So this platform, what we currently have, has grown over a period of time with seeing a lot of regulatory changes, particularly in 2022, as you would be aware. So what we are now doing is, anything that is built has to be rebuilt at some point of time. Whatever you have done has to be reviewed, otherwise it does not sustain. So we are embarking on version 2 of the mutual fund platform, where our goal is scalability, sustainability, regulatory governance and compliance, and more products and features. This is what we are looking at. So we are therefore building a new platform to do that. Why are we doing it? One, anything old has to be revisited, that is one. And second, we feel there is a very important requirement for all of us to work towards mutual funds becoming a popular point of investment more for the women force and youth force in India. For women, many a times you find the percentage of women coming into the market is very limited compared to men.
Yes.
So that should change.
Yeah.
Women should equally find themselves, they are already, but they should find themselves as having a good financial acumen to invest in market. In our opinion, mutual fund is a safer bet. And even in mutual fund, we should talk about such of those schemes where they take a conscious decision. It may be, some people are more risk savvy. They may like to get into thematic indices and that type of investment. People who want to sort of mimic a passive investment, want to just participate in the upside as well. For them, a lot of broad-based schemes are there, large cap mutual fund schemes. So all this need to be made known to the youth and women for the reason which I explained, and youth because India is a country of youth. The median age, they say, is around 28 years. So it's clearly when you catch them young and tell them tomorrow it will be important for you to start saving today to take care of, say, your marriage, your children's expense tomorrow, or your retirement, whatever it is, depending upon the age group. Significantly large percentage of the population who are coming towards the equities market are less than 40 years of age. It's a very big number. 65% of the total population of India is in working group age, that is up to 60 from 18 to 60.
So how do you expand the product offering through this? I mean, you're offering mutual funds across to that, but are you looking at other products like pension products or insurance products that can be sold on this platform going forward, or can be diversified into that kind of platform?
So I feel that even this platform needs to be further deepened, even for mutual fund, because if you look at the total number of investors that we have and total number of potential investors that we could have in mutual fund, we have a long way to go. Maybe at some point of time, exchanges like us should join hands with AMCs, should adopt states or districts, should go there, and targeted population, we should go and talk about the benefits of investing in mutual funds. In fact, that creates a safe market. Investment in mutual funds could be to a greater extent safer. So it helps people in growing a safer investment habit as well. Habit once formed grows into a good thing. So that is the way we think we should popularize. That's what we are working upon. I spend a lot of time in meeting participants of this category, and we have plans in this year to further deepen the mutual fund market across the country.
Tell me something about how you're managing the commodity platform, because all of them are universal exchanges. But I've seen that while MCX is core in commodities, they've not been able to make any inroads into equity markets. BSE and NSE have tried their hands in commodity, but they're not able to get the volumes that required. And India is a big commodity market in that sense.
Now, you have a very valid point here. Commodities can be divided into agree, non-agree. Since you are talking about MCX, I'll start with non-agree only. I'll restrict myself.
Because agree has lots of restrictions, bans, everything that comes in from time to time.
Correct. See, for trading in any exchange, as you rightly pointed out, since exchanges are more technology companies, there is a good amount of investment in technology required. The matching engines of different exchanges are different. The APIs are different. So without investment into technology, no broker can just plug and play into any exchange anymore. So what is the reason that we will be able to provide to a market participant to afresh spend money on investing into a platform where there is no liquidity? If you provide a product differentiation, like what we did in the case of F&O of BSE, if you are able to provide a product differentiation, a uniqueness, a similar but different product, then people will start showing interest if that could be traded in conjunction with an existing product. Any new product out of the blue, which is not relatable, which is not time tested, for which there is no economic need, or for which there is no pressure of demand felt in the market, cannot be just like that introduced. If the same crude oil contract or if the same gold contract were to be traded everywhere in every exchange, what is the value add for an investor to put in money or the broker to put in money to create an infrastructure becomes a question. So that is the place where I think exchanges other than MCX are standing. Like as you said, MCX has not gotten into any equities market. They tried it through a different exchange, of course, in the past. So other exchanges are finding it, including BSE, are finding it difficult to get a foothold into the...
Is it lack of innovation of products in the commodity space?
What I will not say lack of innovation of products. I will say lack of approved products at this point of time. Maybe people have to think a bit more, go to the regulators with specific requirements of modifications of product, and once they get approval, if they are introducing it, I think commodities will trade well. Because in the commodities, one more point to be noted here is, the commodity that you trade here, which is most traded, is the crude and gas. They are available in international exchanges, and many people outside India are able to trade that there. So they to come here to trade this product is very minimal scope. So there are quite a few reasons because of which commodity will be a challenge in India, unless and until we come out with some product differentiation and innovation.
What are the other kind of products that you're looking at, innovative products or platform or areas that BSE is looking to expand itself?
See, as far as equity derivatives are concerned, India is not known for exotic products traded on the exchange. That we would also not like.
Even the regulator will not allow.
Correct, because the exotic products could have a very different risk profile.
They are already grappling with the weekly expiries.
So the most important point, therefore, is the scope for new products get restricted to two areas. One is indices, and second is stock. So for both, we have a lot of ideas as to what we can do. But what we are waiting for is like this. It is too short a period since we reintroduced the derivative contract. As you know, on May 15th, we introduced Sensex derivatives. And on October 16th, we introduced BankX derivatives. BankX has hardly completed any time now, right? And Sensex has completed around 7-8 months. That is too short a period in any product's life cycle to claim that it had reached the pinnacle.
But it's contributing significantly to your financial performance, right?
At this point of time, I will not say significantly, because if you recall...
It will? As if the trajectory is to be seen?
So we are not coming from the financial perspective, as I told you before. We are coming from a perspective of providing a complementary product to the marketplace. So when we are talking about that, has the product matured and today can you say it has sustainable volumes? No, there is a good amount of distance to cover, because 10 months and 3 months, 8 months and 3 months are not the right time for us to claim that it has matured fully. We are eyeing for more institutional participation into the derivatives market. More FPIs should trade. Domestic institutions cannot trade much other than doing arbitrage for a basket. So they cannot do much. So since we don't have stock futures with us at this point of time, so we can't say that no, they will be able to trade with us there. So what we are expecting is in the index area, more and more FPIs coming in is a very important requirement, because institutional players bring in a different trading paradigm. They trade in next week, next to next week, next month, next to next month. So they give a variety of time periods in which they take positions. That brings in stability to the marketplace. That makes it sustained. So once we feel that we are reasonably there, Once we feel there are reasonably good number of FPIs present. Today I have around 60 FPIs present. I feel around 200 to 250 have the potential to come in. We are in discussions with many of the FPIs to make them understand what's happening in India and how there is a complementary product available. If they are able to take it, and if the institutional presence improves, and if there is greater stability, we are thinking of trying out with either stock products or index products. We have ideas of innovative indices and other thought process with regard to stock derivatives, how we should go about. But we can implement it only when we feel that the stability has been achieved for the existing products.
I'm also told that you're looking at data center at BSE. Is it for internal use, or are you looking at as a business?
So today what happens is for volumes to pick up, you require more and more participants, institutional participants. Institutional participants are very concerned about any latency. So they all like to take a space in a co-location center. Co-location center comes with a data center. That's what happens in a data center. So we had some racks earlier. There was not much of a business, so there was not much of attention on racks. And there were a lot of racks which were empty and nobody was taking it. Now with the attention in business, there is already an offtake of all those racks. So if you don't support the institutional business with more colo racks, what I told you to achieve, that is no more FPIs coming in this week, next week, next to next week, this month, next month, all that cannot happen.
Basically, you're providing infra for the new investors who are coming in, basically.
Correct. There are a lot of investors, lot of FPIs who are already in India and trading in NSE. They are yet to be in BSE. If they start finding that this is a complementary product and they should trade, they may like to have a colo space here. So we have to provide it. Since BSE owns the building, and since there can be space always created in your own house, so we are trying to do that, and we will be expanding our colo space.
Mr. Ramamurthy, it was a pleasure talking to you today to understand how BSE is changing itself. Thank you very much for joining us on NDTV Profit.
Thank you for having me here, and all the best to you.
Thank you very much.